Welcome to the YouTube video all about the recent decline in inflation. The United States Labor Department reported that the Producer Price Index or PPI, which measures the final demand prices of hundreds of categories, fell 0.5% in December, the most the measure has decreased since April of 2020. Those in charge of the survey had been expecting the measure to decline by only 0.1%. Energy prices were a major factor in the decline as the final demand energy index dropped 7.9%. Crude oil, gasoline, and natural gas saw the biggest losses in this category. On the other hand, another economic report released during the same period showed that retail sales dropped 1.1%, more than had been expected. Analysis of the report showed that sales at service stations and department stores saw the most losses in this category. Even more troubling is that when looking at the year-over-year sales number, the decline was 0.5 percentage point below the headline CPI inflation number. Economists now believe that inflation has begun to ease and this could have a major impact on Federal Reserve policy. Markets expect the central bank to raise its benchmark borrowing rate in February, though the increase is expected to be smaller than the several hikes the Fed made in 2021. As the data continues to show a lower inflation rate, it will be important to see how this affects the macroeconomic landscape, especially when it comes to putting money into the hands of consumers. Companies will also be looking closely to see the cost of goods and services going forward. So keep an eye out for any news and data that might come out in the coming weeks and months, as the impact of this inflation news is yet to be seen.